quick question. Is Applied Materials a buy, sell, or hold? Don't guess. Let's calculate. Our DCF model will tell us exactly what Applied Materials should be trading at. Here we go. Alright, what does Applied Materials actually do? Applied Materials provides manufacturing equipment, services, and software to the semiconductor, display, and related industries. It operates through three segments: semiconductor systems, applied global services, and display and adjacent markets. They're a technology company worth $175.5 billion with 36,000 employees. Now that we know the business, let's see what the DCF model tells us. Alright, here are the numbers. Applied Materials is trading at 220.30, but our DCF calculation puts the fair value at 174.77. That's a 20.7% spread, so let's see what's driving this difference. Our DCF model uses these key assumptions derived from weighted regression of historical and analyst estimate data. We're using a weighted regression of historical and Wall Street analyst consensus estimates, which incorporates forward-looking growth expectations from professional researchers. Initial growth, 8.8% for the first 5 years, declining to 3.5% terminal growth over 10 years. We assume an EBITDA margin of 31.2% based on the company's historical performance. The discount rate tells us how risky this investment is. Using Professor Damodaran's data, we get a cost of equity of 9.8% and cost of debt of 3.3% after taxes. This gives us a weighted average cost of capital of 9.8%. Now let's see how these assumptions translate into cash flows. We start with high growth of 8.8% for 5 years, then taper down over 5 years to our 3.5% terminal rate. This creates a realistic growth trajectory that captures the company's maturity cycle. The DCF journey concludes here. We've built up to an enterprise value of $144.3 billion, where the terminal value accounts for 59% of the total. After accounting for minus $1.4 billion in net debt, the equity value comes to $145.8 billion, or $174.77 per share. This reflects 3.5% terminal growth and 9.8% WACC assumptions. Sensitivity analysis shows how our 174.77 valuation changes with different assumptions. The 8.8% growth rate and 9.8% discount rate are the most critical parameters. Test your own assumptions at Stockoscope.com. That's our DCF analysis for Applied Materials. Ready to analyze other stocks? Visit Stockoscope.com to run professional DCF valuations on all S&P 500 companies. Adjust assumptions, see real-time results, and learn advanced valuation techniques. Subscribe for daily stock analyses and hit the like button if this helped you understand DCF modeling.